Good afternoon, ladies and gentlemen. Okay, my name is C.S. Liu from Pacific Agri-Science Singapore. So I have the honor to be the last speaker at this conference here. Right, so what I'm going to talk about is mergers and acquisitions, the reasons why for the buyers and for the sellers, and what makes a partnership or a merger and acquisition work, right? And what makes it doesn't work. So those are the topics that I want to cover. But whatever I'm going to talk about today is based on experience and cases in the crop protection industry, which is about $75 billion, not 70. And also the crop nutrition business, which is 210 billion US dollars. So just a little bit of background about myself. I have had 45 years experience in the global agricultural sciences and innovation space. So I have also served as a director in New Farm and also a company in Thailand called Sotus International. It's a major distributor in Thailand. Very, very profitable and very professional company, right, in Thailand. So I've been a shareholder as well for about 17 years until about 8 years ago when I sold my shares to a Japanese company. And of course, I was also a board member of McMahon Organics, which is an Indian company manufacturing technical grade pesticides in India, and they have global business, of course. Are they here today? I think they are also here in the trade show. Right, so I've been also a board member of that company, or had been. Currently, advisory board member of Agribusiness Global. I have been in this position for many, many years, along with several others who have been speaking here as well and exhibiting here too. Okay, let me start with reasons for the buyer for an M&A, right? The first reason, the most important reason I think is mergers is market access. We talked quite extensively yesterday in the 2 LinkedIn live sessions that I have had with Bob Trogel, ex-MVAC, and also Stephen Pierce, right, yesterday, on how difficult it is today to gain market access, especially in the light of plunging margins, for agrochemicals worldwide. And this is also because of the excess or overproduction in both India and China, right? And you have now so many more new players coming into the marketplace, competing with each other worldwide, right? Knocking on the same doors, country to country, trying to gain market access. It's becoming extremely, extremely difficult. And then on the other hand, those that are in the biosolutions area or space, right, with biopesticides, biostimulants, and biofertilizers, again, trying to knock on the doors of all these national distributors all over the world has become extremely difficult in terms of getting past these doors, right? And that is, of course, leading to many companies, many manufacturers and innovators wanting to find a way to penetrate these markets, right? If they are blocked by national distributors, how do we still get in? Of course, one way is through an acquisition of a distributor, right? But then it's only possible for the big companies, right? For small and medium-sized companies, it's very difficult to achieve, right? But market access is important, it's critical. Filling technology gaps. Now, if I can give you an example there, it will be the FMC acquisition of BioPhero in Denmark. Now, FMC is, of course, very strong in insecticides, right? For many, many years, it's been an insecticides company, right? So they bought this company called BioPhero in Denmark that has very novel technology that can produce pheromones very cheaply. Pheromones are typically very difficult to produce and very costly to produce. And that's why pheromones are only used in traps, right, up to now. But this company in Denmark called BioPhero has the technology and a new process to produce some of these pheromones very cheaply. And that would allow farmers to spray, right, these pheromones instead of putting in traps in small quantities. Now you can cause massive disruption, right? So that's why FMC was so keen to make this acquisition and have paid a very decent price, very good price of, from what I gather, about $200 million US, right? So I hope that they will be able to recoup this investment in due course of time. Investing excess accumulated capital, I can give you an example here. Invivo. Invivo is France's largest farmer cooperative. It's also a client of mine. They have a turnover of 12.3 billion euros a year, right? It's a very big farmer cooperative. And about 8 years ago, I got them to acquire a majority share of CCAB Agro in Brazil, right? They still have that shareholding in CCAB in Brazil. And CCAB in itself, it's a farmer cooperative, right? At the time of acquisition, there were about 20 co-ops in corn, cotton, soybeans that own CCAB Agro. Okay, so now going back to Invivo, as an example of investing excess accumulated capital, is not for CCAB, but more for another company called Soufflet. Soufflet is a French company that has, I believe, about 5 billion euro turnover, has a business very similar to Invivo's, but also has a portfolio that's a little bit different. It's not entirely 100% overlapping. So what Invivo did in, I think it was 2019, was to divest a non-strategic business that is in animal feed, right? They thought that it's not something that they can grow any further, because when you deal with animal feed mills, operating feed mills, you're buying up a lot of grain from the world to generate these animal feeds. As we all know, the world's grain trading is actually controlled by 4 companies: Archer-Daniels-Midland, ADM, Cargill, Dreyfus, and Bunge, right? So Invivo divested the feed mill business to ADM, Archer-Daniels-Midland, for about 1.5 billion euros. So with this capital, they need to redeploy, right? So this is where 2 years later, they made an acquisition of Soufflet. So that's another reason why M&A takes place, right? Investing excess accumulated capital. Synergy in products, technologies, and corporate goals. I can give you a couple of examples, but let me just focus on one company, a German company called JM Huber. They are a 6th generation German-owned company. They are very much into specialty ag-chem products, you know, like foliar fertilizers, PGRs, calcium. They also acquired in 2019 Miller. Miller is a US company that is also focused on foliar nutrition, very much similar to, I guess, Brand in the US as well. So then in the last 2 or 3 years, they have acquired a series of companies in Italy: Belchim, Ilsa, and Sifo. These are all, again, companies that are focused on crop nutrition, but not bulk fertilizers, but specialty fertilizers. So very compatible with what they already have in-house, right, that they have acquired prior to this series of acquisitions. And they also acquired a Hungarian potting mix company and also a Canadian seaweed company, right? So that's one example I want to give you. But I can also say Rovensa Next. It's another company that has made a series of acquisitions. They have a portfolio of about 10 or 11 companies now that they have acquired in the recent few years, and all put together under a new name called Rovensa Next. So these are all companies that are very compatible, very similar in terms of technologies and corporate goals. Integration, vertical integration. I can give you an example there. You have heard of Isagro of Italy, and you have also heard of Gowan, which is a US company that has been in distribution for many, many years in the South, right? So Gowan had been a shareholder of Isagro for many years. And then last year or year before last, it took over Isagro. Isagro is an Italian company that is very much focused on generating new molecules. You heard of course, all the big companies like Syngenta, Corteva, FMC, right, Bayer, BASF. They are all R&D companies generating new molecules. But we have this Italian company called Isagro that is also doing that in a much smaller way, but they were a company they are a company that are focused on synthesis of new molecules. So Gowan, being a distributor, had backward integrated into generating new chemistry, new molecules as well. So that's backward integration. Horizontal, so I've given you an example earlier, or a couple of examples, right, of companies acquiring other companies at the same level, you know, that J.M. Huber that I mentioned, right, and Rovensa Next. I have also mentioned that they acquired many companies horizontally rather than vertically. Increasing geographical coverage. Now this is a very good example of Brand. Brand is a company that is based in Illinois, in the US. They're very focused on crop nutrition, but mostly in foliar fertilizers, specialty fertilizers. They have made an acquisition in both Brazil and Spain that allows them to have better servicing of regional markets, right? With Brazil being a very big market, and then in Spain, of course, using it as a base to penetrate the European markets. Diversification is another reason, right, for making acquisitions. So I can give you an example here. Helm, which is a German company, third generation owner, Stefan, whom I have the pleasure to meet a few months ago, right, in Hamburg. And they have always been trading in generic pesticides, but a couple of years ago, they made an acquisition in the UK. It's a company called Unium that is very focused on specialty products, such as crop nutrition products, signaling compounds, nitrogen fixers, seed treatment, and also metabolites that can enhance the efficacy of liquid fertilizers. So that's a company called Unium in the UK that has been acquired by Helm. All right. And then delivering financial results to shareholders, stakeholders, financiers. I can give you a couple of examples, one of which is Nufarm, a company that I worked for 7 years, or way back in the 90s. And of course, UPL of India. They have made so many acquisitions around the world to speed up their expansion, right, globally, and to deliver better financial results to shareholders and stakeholders. Okay, quickening volume growth, achieving economies of scale more quickly, improving ROI. The examples that I gave you earlier, Nufarm and UPL, typically all the acquisitions that they have made allow them to achieve economies of scale, right? Instead of just confining themselves to their home-based markets. For Nufarm, it will be Australia and New Zealand. For UPL, would have been India. So with all these acquisitions that they have made over the years, they have been able to achieve much better financial results. And of course, de-risking, right, by having larger number of customers globally, allow them to de-risk. Today with climate change, with wars, with sanctions, with shipping issues, logistics issues, all the more you need to have a much larger number of customers globally to de-risk. And finally, balancing Northern Hemisphere with Southern Hemisphere sales, right? The example I gave you earlier of Brand is also very appropriate, right? Being a Northern Hemisphere company based in Illinois, they have gone to Brazil, right, which is in the Southern Hemisphere. For Nufarm, being an Australian, New Zealand company in the Southern Hemisphere, by making several acquisitions in the Northern Hemisphere over the years, such as CFPI, such as AgroLinz, and also the Phenoxy business of Rompolong, they basically have made a presence in the Northern Hemisphere as well, right? So this allows them to sell their products, their Phenoxy herbicides throughout the year rather than just half the year. Right? And now reasons for the seller. Why would a seller want to engage in acquisitions, mergers and acquisitions, right? So the first one I have here is cashing out. Okay, a very good example here would be Biotrop in Brazil, being sold to BioBest in Belgium for a whopping $550 million US. It's only a 6-year-old company starting from scratch. They had $120 million of sales at the time they sold it to BioBest. And Singapore's GIC, which is a sovereign fund of Singapore, has also been an investor, right, alongside with Aqua Capital. Now, going back to just talking a little bit about the bio solution sector, all the companies that tend to do well in the bio solution sector today are backed by major investors, such as what I mentioned, Aqua Capital, GIC of Singapore, simply because, again, it's very hard to knock on the doors of distribution companies to carry your products, right? So for the biosolution sector, all the more, it's very difficult to penetrate the markets unless you are cashed up and backed by these major investors, because there's a lot of need to have promotion done, right? Unlike generic pesticides, farmers already know how to apply, how to use them. But when it comes to biologicals and biosolutions, it's something that you really need to go out there and invest a lot on promotion, right? So I guess in this case of Biotrop, it's very difficult to expand globally beyond the shores of Brazil. And so it's much better to just cash out and let a major European company take it forward and go global. Right? Have bigger and better fish to fry. I guess the example I gave you earlier about InVivo divesting a non-strategic business in feed milling and producing animal feed. Obviously, they saw that there was opportunity to acquire another company that is more compatible with their philosophy and their business agenda. So that's why they divested one and then acquired Soufflet of France, right? Sunsetting scenario, a very dim future. If you see that your business is not going to grow anymore, very stable, but could also decline, such as in the case of Nufarm, a company that I worked for before for 7 years, with their phenoxys, with their 2,4-D, right? More and more at that time, Chinese and Indian manufacturers are coming in to manufacture 2,4-D. So it was very difficult. So Nufarm was for sale way back about 10 or 12 years ago, 2 times. Once to Sinochem and another time to ChemChina. In both cases, they failed simply because the owners of Nufarm wanted more money. The shares at the first time during the first potential acquisition by Sinochem was at 15 Australian dollars a share, and they wanted more, maybe $17. So that didn't happen. A couple of years later, actually I was involved in the second attempt to find them a buyer, and we got ChemChina to make an offer. They made an offer of 12, again Nufarm was looking for 13 or more, and again failed. And today, the share price of Nufarm is only about $4. So they missed an opportunity, right? And then in the meantime, there's not much growth in the phenoxy business, right? So they should have done it, but didn't do it, right? No succession. So here I can give you the example. Again, I was involved in this case. Adama in Beijing acquiring Grochem of New Zealand, right? Grochem essentially was founded by 2 shareholders, and one of the shareholders had a daughter and a son, but they didn't really want to be in this business. So that's why Daddy decided maybe it's time to divest, right? So they went ahead and I did the deal, right? Helping to put it together for Adama to acquire. So when there's no succession in place, it's, from family member standpoint, so it's better to exit and divest the business. Stagnation, decline. There's so many companies that I've seen. The founders are now in their 60s. These are distribution companies, like in Indonesia, or Malaysia, Thailand, and many, many other countries, right? Again, the children don't want to take over the business, right? So, and it's a stagnant, because these old guys who have been in the business for 30, 40 years, they don't want to innovate. They don't want to spend any more money to innovate. But yet, competition is getting more and more tough. So these are, again, companies that are prone to engage in an M&A. So I'm actively working with some of these potential candidates for acquisition, right? The right companies to take them over would be the ones that need market access, right? Focus on innovation and production. An example I can give you here is companies that are in biosolutions, right? Biopesticides, biostimulants. These are usually started by scientists who have no ability to go global. They don't have the network or the financial backings, right? Earlier I mentioned, unless you're backed by big guys who have a lot of money, it's very difficult to grow a biosolutions business, right? Like in the case of Biotrop, because they were backed by Aqua Capital and GIC and other shareholders, they were able to get themselves to exceed $100 million in sales, right? So these are the companies that need to focus on just innovation and production, and let another company, which I can bring forward to them to make them able to go global, right? So I'm also working in that area. Aside from mergers and acquisitions of existing companies, I'm also helping startup companies to raise capital and find them global partners. Okay, lack of capital and manpower resources to take the business global. I already mentioned earlier, particularly the biosolutions companies, right? They don't have these available to them. So they need to find a global partner to take an equity and take it forward. Lack of global network of sales channel to access overseas markets. Again, an example would be those that I already mentioned, you know, the biosolutions companies, right? Risk reward considerations in going global to tap potential. When you want to go global, you have to take into cultural differences, right? Business practices that are very different to what you are familiar with. And of course, registrations, which the two previous speakers have already covered. That's another area of focus, right? And it requires a lot of energy, a lot of investments, right, to get your products registered. So whilst I said go overseas, but there are risks and rewards that need to be considered. Okay, so in the case of M&A, mergers and acquisitions, what's the best fit and outcome? I always, when I do deals, I put together deals between buyers and sellers, I always look at it from a very strategic point of view. Is 1 + 1 going to be 3? If it is, then it's a good marriage. So that's when I put them together, right? If it is not, if it is 1 + 1 = 2, then don't worry about it, right? There got to be some synergy, right? Okay, so a good example is InVivo of France and CCAB Agro in Brazil. It was love at first sight when I put them together about 8 years ago, because both are farmer cooperatives. So culturally, from the standpoint of business practices, objectives, looking after the farmers who are shareholders, because they are cooperatives, right? Cooperatives means a company that's owned by farmers, right? So both of them are owned by farmers, so very compatible, love at first sight, right? And in this case, InVivo was very cashed up. CCAB needed a lot of cash, right? They couldn't grow their business beyond the $20 million sales, not because of lack of demand. By the way, the 20 co-ops in CCAB at the time, corn, cotton, soybean growers, could use up to $2 billion of inputs a year. That means seeds, fertilizers, pesticides. It's a huge market there for this group called CCAB, right? Unfortunately for them, they couldn't grow anymore, CCAB, because you know, credit terms are very long in Brazil, right? So there was a shortage of working capital. You see, the French wanted market access. CCAB, on the other side, wanted an injection of capital. They were going to register quite a number of products more to allow them to go beyond corn, cotton, soybeans. So it was a perfect marriage, right? So another best fit and outcome scenario is try to avoid a 50-50, because some M&A deals are not such that they take over 100% of the target company. It's only part of it. So 50-50 is very difficult, because then both sides have equal say, equal power, so that leads to a lot of disputes going forward. So at least a 51-49. Right. So in case of partial takeover, buyer reserves the right to 100% ownership based on meeting mutually agreed goals. So some, as I said, are not outright takeover 100%. So if it is a partial takeover, then yeah, the investor or buyer usually will want to eventually take over the entire company, right? Yeah, in case the seller is projecting very significant sales and profit growth during the ensuing 2 or 3 years, seller is to accept earnouts or staggered payments, right? So when you have these kind of projections in the company, you know, in the next 2 or 3 years, usually the buyer will not want to pay you upfront, right? So it depends on whether you will achieve those targets that you have projected. Okay, post-acquisition plans and diligent implementation of these plans. So that's a very important consideration as well. After making the acquisition, you got to make sure that whatever plans you have in making that acquisition, in making the acquired company's business continue to grow, that you have a plan there that you can implement very diligently. And also recognizing that deal closing is only the beginning of a M&A success story, right? So I will give you those 2 case studies at the end, okay? So, but before that, let me talk about the challenges in getting M&As going and closing deals. The first point is unrealistic valuation expectations of sellers. So we have already come across quite a number of cases where the sellers have very unrealistic valuation of their company, and that makes it very difficult to close the deal. And also sellers want to have the cake and eat it. You know, some of them want to have the buyer come in and bring in not only the cash, but also technologies and products that can help them continue to grow, right? But yet, on the other hand, they also don't want to sell majority shareholding of the company, right? So that makes it very difficult to close the deal as well. Because the companies that bring in the goodies for the future, obviously they want to control the target company, right? And not be a minority shareholder. And also sellers generally don't want to sell when the going is good. When they continue to make money, they don't want to sell, right? So this is also making it difficult to close deals. Buyers want to date, sellers want marriage, right? Sellers, they just want to sell it, right? But then there are also buyers that I bring forward that are looking at starting some relationships in terms of having the potential target carry the products into the market, so they're not willing to jump into making an acquisition, right? And finally, in the Asian context, except in more westernized Singapore, where I come from, selling one's company results in losing face in Asia. You know, a lot of the founders of company who have been around for 20, 30, 40 years, they feel that selling the company is kind of losing face. And not getting high value also results in losing face. So these are, again, impediments to closing a deal. And then you have buyers who want to buy it for a song, right? They're not giving the right valuation to the target companies. And obviously, there are also buyers who are looking at it from the standpoint of there's no harm taking a look. All right. So these are not very committed companies, right? And finally, I want just to talk about these 2 significant deals that I put together, right? As a case study. InVivo of France, as I said, was very compatible with CCAB Agro, right? One wants capital, the other one wants market access. So this was a perfect fit. And of course, when I talked about earlier, you know, post-acquisition, you have to take into account, you know, the synergies that are arising from the union of these 2 companies, right? So in the case of InVivo and CCAB, over the last 8 years, there have been some changes in terms of the composition of the customers, right? Earlier, I was saying CCAB was owned by 20 co-ops in corn, cotton, soybeans. So over the 8 years, they have added more co-ops into CCAB. Right? So that was the right thing to do, because you need to continue to expand, you know, the crop coverage, the geographical coverage, right? Because when you make an acquisition like that is composed of 20 major customers, they can disappear, right? Over time. If they don't like the new management, they can pull out, right? So InVivo of France was able to diversify and therefore not be faced with this threat of any CCAB members, the original members leaving the club, right? In the case of Adama of China acquiring Growchem of New Zealand, as I said, again, very compatible because Adama, of course, had research facilities in Israel. Adama was originally Maktashim Argan, an Israeli company. They still do a lot of R&D back in Israel, right? So all these new innovations need to be out in the marketplace. So Adama obviously is also looking for market access, and Growchem in New Zealand allow them market access into the horticultural sector because Growchem was very strong in horticulture in New Zealand. And horticulture, of course, is the more lucrative market segment compared to row crops, right? So again, very compatible, right? So that's what I want to say today, right, in terms of mergers and acquisitions. Thank you.
Does anybody have any questions for CS?
CS, do you have experience with the two companies they are struggling and they get together? Have you seen a scenario in which company becomes successful?
Two, the buyer and the seller both struggling. Both not doing well, and they got together and become one. Frankly speaking, no, I have not seen that. Have you? Have you come across?
Yeah, I've been across this experience actually. You know, companies that are struggling. You know, two companies, they have a business, and both they are not doing good, and they think when they get together, there will be a synergy. And I seen it in my life, never been successful.
Yeah, theoretically, yes. You know, they can, if they have some of these criteria, you know, reasons for the buyer, reasons for the seller, if there are those reasons presenting themselves for them to be together and doing better than on their own, yes. This is a case of 1 + 1 = 3, right? But I have not seen in real life such a case. Yeah. Okay.
Yes, I have a question.
Yes.
So you're talking about, you know, access to markets. So for biological companies in Brazil, are there a lot of mergers and acquisitions going on still? Or I thought that had kind of dried up, that there weren't as many biological companies to acquire in Brazil. What's your take on that?
Yeah, so on the biosolution sector in Brazil, of course, it's a very big market, the biggest in the world right now, right? And it's still growing. So obviously a lot of interest from outside companies trying to get into the Brazilian market, but more from the distribution standpoint rather than acquiring them for the sake of technology or products that they don't already have. So a lot of companies are more interested to come in from the standpoint of market access rather than looking at acquiring them for what they are producing, right?
All right, great, thank you. Are there any other questions?
Okay, one here.
Talking about still the biologicals, as you said, Brazil is very increasing the amount of products that is being produced in Brazil. But in US is very shy still. Do you think there is any possibility to companies back in US buy companies in Brazil to bring this technology to US?
A US company buying Brazilian biosolutions company and then bring the products in, okay, but yeah, if there are products that the US companies don't have, yeah, I don't see any reason why they would not be able to do it. Is there? Okay, whether that is happening. Okay, I'm not aware of that happening right now, yeah, but again, no reason why they cannot do that if there is an occasion where there are certain technologies in the Brazilian companies that are applicable to the US market, right? But the US market is not growing as fast as the Brazilian market in terms of biosolutions. In fact, there were surveys made in California that shows that many farmers are not yet convinced that they ought to adopt biosolutions in a big way, right? Except for maybe nitrogen fixation, right? There's a company called Pivot. By the way, it's also partially invested by Temasek, which is a Singapore sovereign fund. They have crossed $100 million turnover, which is very significant, right? Any biosolutions company that has sales of over 100 million is rare, and it's a major achievement. So like I said, in the case of Biotrop, it was about 120 million. So again, they crossed the $100 million mark in a short 6 years. So those are major successes. And usually these are backed by strong investors, right? In the case of Pivot, again, as I said, Temasek, which is a Singapore sovereign fund, is one of the investors. And a classmate of mine, Roger Underwood, is also an investor, right? His company called Becker Underwood was sold to BASF about 12 years ago for $1.02 billion, right? So Roger is also an investor in Pivot. Yeah.
Okay.
Yeah.
All right. Well, thank you so much, CS. Thanks for coming.
Yeah. Thank you.